What are the ongoing costs of maintaining an Australian residential property? Thinking of investing in an Australian property is not just about the purchase price. There are ongoing costs to consider to keep your property in great shape and compliant with regulations. Let's have a look. It might be similar to what you're paying back home. First, there's council rates. These are paid to your local council to fund essential services like waste collection, parks, libraries, swimming pool, and street maintenance. Rates vary depending on the location and the property's value. Next up, utilities such as water, gas, and electricity. These are usually paid by the occupant, so if you have a tenant, your tenant will look after these. If you buy to live in yourself, then you will have to pay these utilities fee yourself. If your property is part of an apartment or townhouse complex, you'll pay strata fees. In some countries, this is called maintenance fee. These cover building maintenance, insurance, and shared amenities like pools or gyms or driveways. Don't forget maintenance and repairs. While this is usually minimal in the first 3 to 5 years of a new property, it is still essential to set aside funds for ongoing upkeep to maintain your property's value. Other costs include landlord insurance to protect against damages and loss of rental income, and land tax, which applies to investment properties over certain thresholds depending on the state or territory. By budgeting for these costs, you will not only safeguard your investment but ensure a hassle-free ownership experience. Need more advice or details? Get in touch with us today.